So I created this Google Sheet to help analyze variation in prices in stocks. Now, one thing you can look at is called the intraday variation, where we're actually going to look at the differences between the open prices, low, highs, and close prices within a day or from the previous day compared to the current day, from one day to the next. But we're also going to look at the day of the week variation, meaning comparing, for instance, Monday's closing price to Wednesday's closing price, or Monday's closing price to Thursday's closing price. And I'll show you how that works as well. And then I also have another sheet where we're going to look at the average prices on different days of the week and get to see how the average price on a particular day can actually be lower than the average price on another day of the week for a stock. And we can talk about what that actually could mean potentially. So what I'm going to do in this video is just make sure you have the basics of how to actually use the Google Sheet and just to understand what it does overall. Now, the first thing is to actually type in a stock symbol. So what I'm going to do is actually delete the stock symbol and delete this number, the number of days in the past. When you do that, nothing will work because there's no data. So the first thing is to go to this box, this cell, B3, to actually type in a stock symbol. For instance, AAPL is Apple. And you still don't have stock data, but you do have the current price and you have the company. The reason you don't have data is because you have to put in the number of days that you want to go back in the past, right? There are many years of stock market history, so how much time are you looking for, right? So you're going to put 365. I mean, you don't have to, but I'm going to put 365 in this case to look at the past year. That is my favorite thing to analyze, the past year. And when I put 365, it automatically gives me a start date 1 year ago, and then it gives me today's date. Right, so it starts with today's date, and it goes back 365 days. So that's September 24th, 2021, and today is September 24th, 2022. So it's 1 year of data. And within that year, we had 252 trading days because remember, the stock market is only open Monday to Friday. And then we have holidays. We have days off. So basically, there was 252 trading days, which we can see here in this list, which is the actual price data of every single trading day for the past year. And then we have an estimated number of trading weeks, which is not really exact, but it's saying, okay, 5 days a trading week. So you just take the 252 divided by 5, and it's approximate. All right. So now let's take a look at what actually gets pulled up. So actually, what gets pulled up are the 4 price points of each stock market trading day. All right, we get the open price, the low price, the high price, and the close price of each of these trading days from September 24th, 2021 all the way up till the last trading day, which was yesterday, September 23rd. All right, and we get the days of the week, which is not from Google Finance. That comes from my formula, right, that I entered here. So then I get the days of the week as well. So we can see what actual day of the week these dates occurred. Now, one good idea as you're looking at this data is you might want to actually open up the stock. If you're using Robinhood, you can view it on Robinhood. Even if you don't have a Robinhood account, it will open. But then it's going to, ask if you want to sign up. But I do have a link if you want to sign up for Robinhood, to use Robinhood to do trading, right? Or to do investing. Now, here's the stock. And we see right now we're on the 1 day chart. So this is the last day, which was yesterday, of the stock market. And we can see, remember that on the chart, you have what are called after hours. So it goes actually beyond the closing price, and it starts before the open price, the pre-market. Okay. But these open, low, high, and close, this is the price at 9:30. This is the lowest price of the day, the highest price, and then this is the price at 4 p.m. Right, 9:30 a.m., 4 p.m. Okay. The main thing I want you to understand is the percent change. The percent change is a change in price from the previous day till today. So you can see percent change here in these prices. Okay, you can see what the price was on the previous day, and then you can see what the price is today. So today, on this date, not today, but on that date. So on September 29th, the price was 142.83. Before that, it was 141.91, for instance. So it went up 0.65%. And so it does that same thing for each day of the week. And then you have your average at the top. Basically, at the top, you have a summary of this daily percent change, which is the average of all these different numbers, the minimum, the smallest of all these different numbers, and you have the maximum, which is the largest. Right? So this makes for some interesting things to see, because you're not going to get that just looking at this chart on Robinhood alone, right? Now you can look at the past year. You can click on 1Y, which is the past year, and you can see all, you can see the how it has changed over the course of a year, right? But you're not getting the daily percent change, meaning from each one day compared to the next day. What they're giving you here, this percentage is actually, they're giving you their change compared to September 24th, 2021. And they're showing you a long time, through time, how much it changed compared to that initial date. All right, that's all they're actually giving you here. But this is the actual daily change that you're getting with these numbers. Okay, this is the change from one day to the next, right? So that is what that is. Okay, and then you have other things, and I probably should have, for those who may not be familiar, I should have shown you that this percent change is also visible on the one-day chart. Throughout the trading day, you can see the percent change compared to from the previous day, right, to that current date. Right, so this is something you can actually see on the chart, but you can only see September 23rd, the last date. Right, I cannot go back really and look at other dates, where here I can go and I can look at all these different dates and I can see what the number actually was. All right, so I have an overall average, I have a minimum, and I have a maximum. And then I have the low percent change, I have the high percent change. Right, so this means basically the lowest one that occurred, and I have the highest percent change that occurred on each of these days. I also have, and I'm just kind of going through these briefly. In other videos, I can go over these things more, but basically previous open to open. So this is kind of like percent change, but comparing open prices. And then I have the range, which is kind of when I want to stop one a little bit, which is the low to high. So this is giving me the actual gap between the lowest price of the day and the highest price of the day. So there's also the open to high gap, the difference between the open price of the day and the high price. There's the open to close gap, the difference between the open and the close price. And there's the open to low, which was the difference between the open price and the low price, which is usually negative because normally it goes down from the open to the low unless the open is the low. But basically, that's what these different things are. So again, in some other videos, I'll look at these in more detail and talk about them a bit more. But if you are already involved in some analysis and trading, you might already be familiar with these gaps: open to high gap, open to close gap, open to low gap, and then of course also the range. Right? And you can also look them up if you're not, if you don't completely understand what these mean. But basically, it's just the difference between different points of the day. It's the difference in price between these different points of the day. All right. And so for each of these, I have the average, the minimum, and the maximum. All right. And that's basically what this part of the sheet is. Right. That's basically what it does. Now, this part I'm not going to go over in detail in this video, but I'm just going to mention briefly. You can pick two different points in the week. For instance, Monday close versus Thursday close, Monday close versus Wednesday close. And basically what it does is every single Monday, it will pull up the closing price. And then every Wednesday, for each of those Mondays, it will find the following Wednesday that follows it and pull that closing price in here as well. So you can see like this Monday closing price, 145.37. Closing price was pulled in here. And then you can see the Wednesday closing price of the following Wednesday. If you move down 2 days down, 142.83. That was Wednesday's closing price. You see that gets pulled in over here. All right. And it does it by counting 2 days later. All right. And it does that just in case there is no Wednesday. It'll still give you something. It'll give you whatever 2 days after Monday is, that's what it's going to give you, which is usually Wednesday. All right. And so then you get the percent change, which is just telling you how much the price went up or down from that Monday over to that Wednesday. So here you have a negative percent change because the price went down from Monday to Wednesday. Here you have a positive percent change because it went up from Monday to Wednesday. Here it went down. Here it went up, right? So on and so forth. And so it actually gives you get to actually look at the behavior between those 2 points and how things actually changed, right? Which is interesting and also potentially useful if you're into trading, right? And then there's some other stats such as the average of these different changes, the gain frequency, how often were they positive, right? We see that they were positive the majority of the time, 65% of the time. These numbers are positive. All right, and we also have the average of the different times it was positive, the gains, and on average how much it lost, the losses, right? And that's average of losses. Okay, again, this is just a brief overview of this. I can go over more detail in another video. And then you can set up a target minimum, and it tries to see how often you hit that target of 2%. How often was that target hit? Right, it was hit 39% of the time. Okay, so this percentage here has to do with time. The frequency is time. Okay. I also have the overall stats. Yes, I do have the average, as I mentioned, but also have the history of the largest amount it gained between these points, the largest loss suffered, the smallest loss suffered, and the smallest gain ever made. Right? So this can make for interesting analysis. And you can, of course, change these. If I change this to high, right? And this is using formulas to pull this data, to pull these calculations, or to perform these calculations on the data. So it's not like when you change this, it doesn't have to pull new data because the data's already here. You already pulled the data at the beginning. Right? When you type in the symbol, all the data gets pulled in. So right here, all it's doing is analyzing, pulling it in and doing the calculations. Okay, so you can actually just keep changing this and it will change very quickly. Right, so I changed this to Wednesday high, and now you can see the differences and everything, right? This frequency, all these numbers are going to be different. Okay, you're going to see different things down here because now you're looking at high prices on Wednesday. Okay, instead of close. Right, and you can even change the day of the week. Thursday, you can do all these different things and see how things change. Okay, and it's very interesting and again potentially useful, right? And that's basically the main. Those are like the main functions of this Google Sheet overall, which is what I'm attempting to give you in this video. But also, you can look at the average of all the different prices per day of the week. The average open, close, low, and high prices on Monday, Tuesday, Wednesday, Thursday, and Friday. The lowest and the highest. Like, for instance, for Apple, we see for all 4 price points that the lowest average is on Friday and the highest average appears to be on Wednesday, right? According to, the calculations. And then you can this gives you an idea of which days, how the days, each day of the week compares to the average. And that's what this is. So Friday is typically a bit lower than average. And it's showing you that Monday, Wednesday are a bit above, and Tuesday and Thursday is kind of like a mixture depending on the price points, right? We see that mixture. These are just averages. This is not saying that this is how it's always going to be every single week. Please do understand that. This is not predicting the future. This is an analysis, mathematical analysis of what has already happened in the history. All right, and then I have some other stats that it pulls as well. The intraday things that I looked at on the first sheet. All right, and then this sheet, I'll just very briefly mention, it does the same thing as this sheet that the sheet does at the top with the days of the week and the average prices. But what it does is it actually does it like if you tell it to look at the past year, it'll also look at the past 6 months, and it'll also look at the past 3 months. So you can see like the past year, past 6 months, and then the past, the overall time, the last half of that time, and then the last quarter of that time. All right, for people who want to go a little bit more into looking at different time ranges, to see, if things look different for different time ranges. All right, different historical time ranges. Okay, you don't have to necessarily go that far, but that's just something that I personally found to be useful to me, for me to think about, and I thought it could be useful for other people as well. And in fact, that pretty much holds true for the whole sheet, where these are things that I, over the couple years I've been involved in trading, have found interesting things for me to calculate. And then I, over time, created this Google Sheet, realizing that these were things that I wanted to know. And then I put this Google Sheet together over time. And so now I'm sharing that with you, and you can get a copy of it through a link in the description of this video. And so you can go ahead and do that. You can also contact me directly. Do give me time to respond, because I am personally responding to these emails on my own. And you can also leave comments, questions, or suggestions below the video as well. And do keep in mind, again, I will make more videos going into more detail on different stocks, not just Apple. Apple's just one example, to show some different things that I'm looking at with these different variations in price that occur over time or throughout each week, between different days of the week. And so I'm not an expert in trading or investing on the stock market or anything like that, so I do want to make that clear. But I am someone who I do have a background in programming. I do know how to program Google Sheets, and so I have used that knowledge to create this Google Sheet and some other Google Sheets as well, to do this particular task of programming price variations. I also create Google Sheets for other things as well, such as e-commerce and lots of other things in general. But on this channel and in this video, specifically focusing on this Google Sheet for stock market price variation. And so if you like a copy, get a copy through the link. If you want to sign up to trade or invest on Robinhood, I have a link for that as well. And then contact me directly. Leave comments, questions, or suggestions below. I am Mr. Mark. I look forward to either hearing from you directly or seeing you around on the channel.